So in today's video, we're going to be more about Uber's. The last video, Uber was trading around $27, and a lot has changed since then. So I wanted to kind of make up this follow-up video to kind of answer some of your questions and to kind of update you guys on what's been going on over the last week or so. A lot has changed. In Uber stock, we've seen quite a lot of volatility here at the latest 5-day chart. So I can explain what happened here, read you guys some important information and kind of see where we're headed in terms of. So quickly, let's just explain what this huge dip here. It looked like Uber was going all the way in dollars. This is an opportunity to pick up Uber shares. Now remember guys, Uber IPO'd at around $46. So at this point, at around $14, you're getting the stock at a massive discount. So what happened was, as the CEO stepped in and performed damage control. So it says here, article posted on Business Insider, Uber surges 43% after CEO says it has enough cash to get through the coronavirus pandemic. So it says Uber skyrockets as much as 43% after CEO said on a call with investors that the company is in solid position to weather the coronavirus crisis. Uber's balance sheet is incredibly strong, adding that at the end of February, Uber had $10 billion in unrestricted cash. So while Uber's ride segment has declined 67%, Uber Eats has seen growth as people stay home. So guys, basically he came out there and just wanted to let everybody know that Uber is not going bankrupt anytime soon. The company has a lot of cash, and this was just basically damage control from the CEO. He said we are well positioned to weather this. So I just want to talk a little bit more about, obviously, since Uber rides is going to be greatly affected by the social distancing and the stay-at-home orders posted by state and federal governments. As you can see here, our Eats business has become an important resource right now, especially by restaurants hit by containment policies. So what's basically been going on is that Uber stock has been down quite a bit, but the Eats business is going to be doing a lot better. And it's nice to see the Eats business. So here's some of the news that was posted recently after I posted the latest video that I posted on my channel. So it says Uber Eats partners with Chipotle on mobile delivery. So they added Chipotle, and they added quite a few more delivery partners. I also found a nice tidbit here posted on Yahoo Finance. So I'm going to show you guys this article. Okay, so for some of you guys out there, companies, if you're not familiar with them, when they post a quarterly earnings report, they also host a conference call. The conference call usually lasts about like 30 to 45 minutes, and it's usually made up between the CEO and people at the top of the management and analysts. So the analysts call in and they ask the company CEO questions and things like that, the CFO questions about the company. So it says, according to JMP analyst Ronald Josie, Uber said on a recent conference call that it has seen a 10-fold increase in restaurants signing up for Uber Eats since last Thursday. So guys, I want to show you guys why this is such a huge factor. I've been reading some of your guys' comments, and the latest video I posted, a lot of people were upset at kind of Uber as the way the company's run, saying that it's an immoral company, say that it's full of lies, that they're cooking the books and stuff like that. Well, I understand that a lot of you guys out there are really upset at perhaps how Uber and Lyft as well are treating drivers, but just realize that Uber is much more than just a rides company. So I'll show you guys their latest earnings release, and you can find all of this stuff on Uber's website. You just go to investor.uber.com. So I'm just waiting for this to show you guys. Uber is it's not just a rides company. So it's actually broken down into basically, I would say three main segments. So rides, of course, and freight, other bets, which is very small percentage of the bookings and revenue. So as you can see here, basically Ride and Eats make up the majority of their bookings, and that Eats segment had already increased 71% year over year. Now obviously the everybody's talking about, but Eats is the part of the business that's going to do very well in the virus crisis. And it is a critical thing as well, because with social distancing, people not able to leave their houses, a lot of the grocery stores have shelves are empty or not well stocked. people have to eat. So what a lot of the governments have done is they said basically some restaurants can still be open, but you can't dine in, right? It's takeout only. So a lot of people are going to be ordering food online through the mobile app or through their computer for the first time ever. So this will bring a lot of new users and a lot of new restaurants using the Uber Eats platform. And me myself, I'm new to this as well. I probably 2 years ago was the first time I ever ordered food like regularly online. I used to order it every now and then, maybe in the past, but I would say over the last 2 years, it's become a regular habit of mine. And even during this lockdown thing, I'm probably ordering food online 4 to 5 times a week simply because I just try to not to go out if I really don't have to, Like I said, I make videos for you guys to do stuff like that. So a lot of my work is already based at home, but it just seems like ordering food online is just a natural extension. So I do use some of Uber's apps all the time. So this is another example of me putting my money where my mouth is. So because of all of this, and I really like the Uber Eats segment. The segment I'm not using right now is obviously the rides, but I expect that will basically be bouncing back. Once once hopefully we get this coronavirus thing control. So now I'll show you guys one more piece, and I thought this was a really interesting article as well. Posted on Market Watch. It says Uber stock is on half price special because of coronavirus. Wells Fargo analyst coronavirus outbreak, but like the long term potential. So basically, he said that it's basically made the stock on sale half off. In the long run, Fitzgerald sees Uber as well positioned to benefit from the income. He thinks the company has a financial liquidity emerge from the coronavirus crisis and eventually become a consolidator in the food delivery market. 2/3 of Uber's cost structure is variable, creating an automatic shock absorber against decreasing revenues. In the event of an 80% decline, with $4 billion in unrestricted cash and break even on ride-sharing segment adjusted earnings. So basically, and then it just talks about, also mentions Kana Accord, Genuity, Maria Ripps, and Michael Graham stayed bullish on the stock and kept their $55 near-term pain. Perhaps reassuring to investors was the liquidity update, reminding investors of the strength of Uber's balance sheet and the flexibility inherent in the company's capital position, even when considering a pessimistic, perhaps unrealistic scenario. We continue to think Uber's business will be among the most impacted and should be among the best performers on the other side of the pandemic. So obviously, I'd liked Uber stock even before the coronavirus pandemic started, but now I haven't changed at all my position in it. I think I talked a lot about driverless cars in my previous video, and now I'm going to be talking a lot about answering some of your guys' comments. So basically a lot of people, you guys were basically, there was a huge juxtaposition. So out of the comments for you guys that you guys posted on our last video, some of you guys have been buying Uber at around $24. I'm reading some comments here, $15 as well. But then a lot of you guys had a problem with kind of the moral compass of Uber. So here's my thoughts on this. First of all, I'm going to show you guys. I personally own Uber stock, and then I want to talk a bit about some of those I kind of say moral issues that some of you guys have been talking about. So this is my current position on Fidelity. I have 23 shares now. I basically have been adding shares. I bought Uber actually at the IPO of $46. I basically am just trying to add shares on a consistent basis. I jumped in and I picked up some of those shares when it went below $20, but that didn't last for long because the CEO came in and the stock went back up. So right now I'm at an average cost basis of $31.48. And I've got 23 shares, so I'm planning to add. I have some more cash flow coming in, hopefully in the next day or two, so I plan to add to that position greatly. But basically, for me, long term, I really think Uber has the potential to become a $1 trillion company, and I want to be a part of that. So why do I say $1 trillion company? Well, for me, my future price target for Uber, assuming there's no stock split or anything like that, is well into $500, $600, $700 range. And the reason is that if you take a look at a company like Uber, right? So first, let's go back to TradingView and just talk a bit more about why I think this. Well, first of all, I'm looking at the market cap right now. So for me, Uber is on the same level as Facebook, Google, Amazon, Netflix. It's that type of company. And why I say that is that I say when I call it, I refer to a company like this as a major tech player. So a major tech player is a company that all of us are very familiar with and that we kind of use as a nickname, right? So, if you have friends over or, your girlfriend's over, or your spouse or whatever, you know, we say, you might want to sit down, let's watch a Netflix, something like that, right? It's, everyone knows what you're talking about. Everybody knows what Netflix is. So the same thing, if you're looking for something online, people will say, oh, just Google it. Well, we all know what they're talking about. Just Google it. I go online, I search for it, right? Or if you meet someone for the first time and, you want to stay in contact with them, you just ask them for their Facebook. And then the same thing with Uber. If you want to get somewhere in the city, you get an Uber. So these are the type of companies where people would use their brand name and we already identify what they're talking about. There's not many companies like that. It's only a handful of them. So Uber is, for me, is in that $1 trillion. It can become a $1 trillion company in the future. And that's the type of company that I'm looking to invest in. So I'm not trying to guess when this is going to happen. I'm simply adding shares every month consistently. I don't have all my money in Uber stock, but this is a stock where I'm just going to continuously add to the position, add to the position, add to the position, add to the position, continually, not over time. I'm not going to just buy a bunch of shares and hold. No, I want to keep adding to it because I want to see the company grow. And the fact that I'm spending my money with the company basically every day, I want some of that money back that I'm spending. So I don't want to end up like what happened with me where I missed Amazon, where when I was in high school, I was buying stuff on Amazon all the time, selling stuff on Amazon, and I didn't own the stock. So that was a mistake I made when I was a teenager. I was probably 14, 15 years old, selling stuff on half.com. I think I told you guys this story already. But basically, I missed the boat. So for this time, I'm in my early 30s now. I don't want to miss the boat on Uber. So with my price, when I say I can retire on Uber stock, I simply think that as long as I continue to keep acquiring shares over time and continue to build my position larger and larger, I don't see any reason why we can't see Uber as a $1 trillion company in the future. No one would have thought that we would have seen $1 trillion because at one time $1 million used to be a lot of money and $1 billion used to be a lot of money. So as time goes on and there are more and more people earning money, wages continue to increase, inflation continues to increase, we're going to see more and more companies hit the $1 trillion mark. So that's where I would say my long-term price forecast is on Uber. And the way I arrived at that number was, well, I simply just basically multiplied the stock price times 30. So at a 36 billion market cap, if you multiply that times 30, that puts you at about $1 trillion. So that would put Uber at about $600 per share. So that's my long-term price target. I expect Uber to become a $1 trillion company. So I hope that kind of answers that question. Okay, so some of the concerns you guys had, you guys were talking about the moral compass, how Uber screws over their drivers. So here's my take on that. Uber is a company that is out to it's basically trying to be run like Amazon. Amazon, all they care about is their customers. They really don't care about anybody else except their customers. Even more so, I think Amazon cares more about their customers than their shareholders. So Uber is one of those type of companies too. They don't really care about the drivers that much because they're so focused on customers. They're so focused on, even now with the whole coronavirus thing, they've cut all delivery fees so customers can get food without paying extra money because they realize the crisis times. This is another one of those companies where they just care about their customers so much. They're offering coupons, free delivery during the coronavirus thing. And because of this, the problem is that drivers are going to get neglected because Uber is so focused on the customer. So I think it's a shame that drivers don't get paid in what many people will consider a living wage. But that's just one of the problems that we have in these times, source of income. I think a lot of people that are driving an Uber, I think they just don't realize how important it is to have multiple streams of income. My grandfather, he used to work in a factory many years ago. Uh, and he was supporting maybe like 7 or 8 people on one income. It's just not like that anymore. So for people driving Uber, I would hope that they're not relying on Uber for all of their income. It's important now, I think, to have multiple streams of income. So how did you can do that? Well, some people can drive for Uber. Maybe on the side you're doing something, you're selling something on Amazon, or maybe you have a side business walking dogs, or if you're a really good cook, you can try to do like some part-time catering or something like that, or you can get a second job. What I'm saying is that you don't want to just have one stream of income, because if your only income is driving for Uber, of course you're going to suffer. But if you're using Uber as like a gig, well, then Uber can be very beneficial because you're not 100% reliant on Uber's income. And let me show you guys exactly why I think it's so important to have multiple streams of income. This is kind of turning a little bit more into a personal finance video than an investing video, but I just think it's really important to drive this point home for people that are worried about the moral concerns. You should never have all your eggs in one basket. You should always be diversified. So you should be diversified when it comes to stocks, and you should be diversified when it comes to your income sources. So I just want to read you guys. Here's hopeless and Lyft drivers face. It says new basically financial crisis. It says city analyst Itai Shibano noting that active users have dropped significantly, down 40, down 31%. Basically, because of this lockdown, people have been told, the states with the biggest populations, everyone's been told to stay at home. So no one's really using Uber right now. So it says a lot of Uber, they're pretty much, hopeless and scared that they're going to run out of business. I was saying in the first place, you should all your, because I think the problem is that Uber is their only income. So there's nothing wrong like working one job. I would say try to have multiple sources. Now that no one's riding and everyone's basically on lockdown and told for social distancing purpose now, I would say instead of just blaming Uber for something that they can't control, these by governors. It's not Uber's fault that they don't take unnecessary risk, like going out and getting infected, and now everyone's in the hospitals. So my source of income that you earn can. So then you want to build multiple sources coming in, so that if one runs out, you're not going to something like that. Okay, so now basically, or talking about in 2 to 5 years, we'll have a 10-bagger. And I really think Uber company in the long term. This video is pretty make a video on that, but guys, things are looking nice. I think it's nice to see the CEO kind of come in, although that was an amazing buying opportunity, although it didn't last that long. So we basically only had about a couple days. So for you guys that bought in there, congrats. I picked up a few shares at around 16. I actually didn't catch it all the way down here. All this tremendous buying opportunity. So guys, let me know what you think about Uber. I hope I answered some of your guys' questions that you had in the previous video. Like I said, I don't know everything, and I'm just like you. I'm trying to learn as much as possible, and every day I'm trying to take in more information and constantly stay with my ear to the ground on what's going on with the economy, how people are responding to the coronavirus, things changing, and I hope to provide that information for you in the video. But I will stand by my bold statement that I'm going to retire off of Uber stock. I'm planning to see this company become a $1 trillion company. And I think in this decade, I think you'll see many companies become $1 trillion companies. So it seemed like in the past decade, basically the strongest tech companies like Amazon, Google, Microsoft were able to eclipse the $1 trillion mark. And these are the best of the best, guys. I mean, these are some of the arguably the best run companies in the world. So in the previous decade, only the biggest, best companies had any chance of eclipsing that $1 trillion market cap. And in this decade, I think you're going to see a lot more companies do it. A lot. I think you're going to see an explosion of economic activity in this decade, and I think you're going to see a lot of global economies, particularly India. I think you're going to see India explode as a global economy, and we're going to see a lot of $1 trillion companies. So my bet is that Uber becomes one of them. So I currently have about a $500 to $600 market price target, price prediction, whatever you want to call it, on Uber stock, assuming there's no stock split. So guys, that's it for now. Let me guys know what you think about Uber stock. Are you buying it? Have you given up on Uber stock? What do you think about how the company's being run? Do you think they're going to be able to survive the coronavirus? epidemic do you think they have enough cash on their balance sheet? What do you think is going to happen? So let me know, guys, and be sure to respond to many of your comments as possible. And I also plan to address some of your comments in the next video that I post as I keep you guys updated on Uber stock. So that's it for now, guys. This video is running on a little bit. I want to end it now. So thank you so much. And hit that thumbs up button if you enjoyed this. Be sure to subscribe for more content on Uber and some other stocks that I like and that I'm currently buying in this crazy times. So that's it for now, guys. Appreciate you so much. Please stay safe out there and take care of yourself, your family, and your friends, and everybody. I hope you guys are doing great, because these are some tough times, but we're tough people. We can get through this. So that's it for now. Thank you so much, and until next time, take care.